Good morning, everybody, and this is your S&P 500 day trade setups for today. So just starting off on the weekly chart, and I just want to highlight a few things. First thing is this trend line. You can see, just draw a line along the first two fractals here for the year, and then you'll get your trend line. You can see we clearly in an uptrend at the moment. Oscillator is pointing quite strongly to the upside, but what you can also see quite clearly is we are in an area that attracted buyers in the past. You can see this area right here in the middle at 41.48. Let's just round it off to 41.50 is an area where we had quite a bit of consolidation last year. We tried to defend it this year. We rejected it once this year, and it's formed a double bottom as a result. So that is your neckline, which is at 4,200, and you can see we've got diversions here, price making lows, oscillators making highs. So this is setting up quite nicely if we get through 4,200 for a big double bottom. And basically what that does for us is our double bottom pushes us up to test the previous highs of last year. So everything to watch for at the moment. Another thing I just want to point out on the daily before we get into our charts is oscillators group to the upside on the daily. So that is not conducive for encouraging longs at the moment. So this is a massive band of resistance at the moment. We're sort of bouncing around all over the place. We're flirting with the 155 on the daily, but I'm expecting some kind of a pullback onto structure or even an extended range before bursting through. Last thing on the daily is you've got this, which is now a shoulder. It's a failed double bottom, but that is now a shoulder. This is a head. So, you would expect the price to come back, form another shoulder for a move to the upside, just based on what we've seen on the weekly. Okay, so not going to happen overnight, obviously, but the bigger picture is looking very interesting. So just onto the 8 hour, you can see we're clearly in this area of resistance here. We've bounced up above it and then range bar, so that's kind of a triangle that's forming there, typical before non-farm payrolls, and non-farm payrolls is today. So we should see something happen. We've finally got a crossover of all the moving averages. Oscillators, we've got divergence here with a crossover, so that's indicating some kind of a pullback. The question is to where. And I'll talk to you about a strategy that I've used in the past on the lower time frames for non-farm payrolls. But before we get there, just have a look at the 3 hour here. You can see most of the week we had a fairly wide range, and then, as I said yesterday, more than likely either drop back into the range or form some other range, and that's exactly what we've done. We've just gone sideways. So there's nothing worth trading at the moment on this. It's waiting for non-farm payrolls. We're waiting to see what's going to happen. The trend is up, that's clear. Oscillators are starting to separate, which is interesting. So obviously, if this one keeps dropping like that and then crosses over while the slower moving oscillator stays along the top, you've got a fairly explosive move coming this afternoon. Right, let's get down to the hour, because that's more the level that we want to pay attention to. And you can see what happened yesterday. Absolutely nothing. Pure sideways price action. For me, the longer we stay sort of above this area, and it's 41.48, and then just below it over there where you can see where we bottomed out, which is 41.42. So the longer we stay above this, the higher the probability of a move up. But I think we're going to be capped by 4,200. I don't see us shooting past that. So if non-farm payrolls is kind of muted and sort of exactly as expected, you'll probably find us just continue ranging. If it's worse than expected, you'll probably find a squirt down where the buyers will see value, because they're betting on the economy at the moment. So they're betting that inflation is going to decrease. So they'll find a level down here which will be worth buying in, and you might as well just add that level in, because it's going to be roughly over there with 4,100, which basically bottom of the bigger range. And it would also, these tails here would be the target for this flag that's formed. just let me just put it in so you can see what I'm talking about. Okay, so there's your flag. There's the flag. So target for the flag will be the lowest point, or the first part of the flag, which is this tail here at 40.80. Now, it's not a massive flag. You might as well just treat it as a big range. So that's kind of the two scenarios that could play out today. 15 minutes, you can see absolutely nothing worth trading. As if you wanted to, you could have taken a stab at this off the 155, but we've still got a few 15-minute gaps open to the downside as well. So a strategy that I normally look at with non-farm payrolls is, this comes to the hour, I look for the extreme levels. And for me, this is an extreme level down here. Put a small position order in here with a fairly wide stop, and this is quite nice because it's a 400-point stop loss. So I just put a stop below all these tails, because often what happens is you see price spike down based on the news coming out, and then the buyers jump in at the next level, seeing sort of value, and then it spikes up again. So I sort of like put a limit order in, put the stop below the most logical area, which is here, and then you'll see price fly down, pick up your order, bounce around, fly up, and you make a quick 100, 200 points, and then you sort of get out again. Because normally what happens is, as the data is released, it spikes, then it comes back up, normalizes, and then it either decides, which direction it's going to go. That's kind of what we do. Also tend to do it to the upside as well. So find the extreme level to the upside. So you don't want a level that's really close to price, because that kind of thing doesn't work. So you can see this is the extreme level to the upside. So there's 4,200. So you put a limit order in here, and just keep looking to the left, make sure there's no other level, and then you're using a 300 to 350 point stop loss. It will hit the level. It typically doesn't fly through. It kind of rejects it, comes back, and then sort of normalizes, and then decides which direction it's going to go. So normally a small position. Sometimes you can put the long and the short in. So you put the short in, you put the long in, and you basically wait for one of them to be picked up. I've actually had it sometimes where both get picked up as well. But just bear in mind, you are risking. It's extremely risky. So you're bargaining on the fact that you've got a major level that the sellers will come in by shorting, and then you're bargaining on the fact that you've got a major level that the buyers will come in and buy off. So that's typically a strategy to get your heart rate moving, because you got to be prepared to take the stop. That's the other thing. You can't, because sometimes it does just continue flying through. So it's kind of a roulette machine strategy for non-farm payrolls, but it does tend to work out so long as your levels are far away from where price actually is. So you look for the extreme levels to the upside and extreme levels to the downside. Overall, I'm still waiting for this 4,200 to break. 4,200 breaks, we find support there, then we have a go for long-term longs. Failing that, I'm looking for a pullback onto structure before buying back into longs, and then something all the way down to this area here would really excite me, which is down to 4,000. So pullback back to 4,000 would really excite me, get me in long, and then that would be forming my right shoulder, and then I'd be waiting for anticipating a break of this level of 4,200. May not even happen, so it may just bounce around in this area for the remainder of this week and then next week, and then the next bit of noise that happens then break through, or just roll back down and come test the bottom of the range and then start moving to the upside. So longs for me is really on the break of that area, otherwise it's buying off a pullback. That's the only two scenarios that we have today. So guys, be careful. If you're going to take my wild idea, just make sure it's a very small position, and just anticipate that you are going to lose that money, because it may just trigger past you and go to the stops. There'll be a lot of stop hunters that'll be trying to trigger stops on specifically for that reason, because that's what a lot of people tend to do. Okay, anyway, that's kind of my view today, but be careful, this is sideways, so if you risk adverse, I think stay away from this. Wait for next week. Hope that helps, and we'll catch up with you tomorrow. Cheers for now.